Kia ora, I'm Mary Jo. I'm a senior economist here at Kiwibank, and today I've got with me our treasurer, Belinda Newman.
Kia ora, MJ.
Yeah, so today we're going to talk a little bit about the Reserve Bank's latest move. It's interesting, 6 months ago we were here and the Reserve Bank had signaled a 550 cash rate. And here we are today. The Reserve Bank delivered a 25 base point hike yesterday to a 550 cash rate. But the markets were expecting a little bit more from the Reserve Bank. What happened on the day?
That's right. So the markets were expecting that the decision yesterday would be between a 25 and 50 basis point hike. Instead, they considered an on-hold move. So the 25 basis points with the dovish outlook, with a more dovish outlook, was quite surprising. So they've kept the OCR track at 550 for the rest of this year. Markets were expecting the possibility the OCR would go as high as 6%.
Yeah, we were hoping to see that 550 remain the forecasted peak. Yes, we've seen a surge in net migration that obviously has implications for aggregate demand and therefore inflation. But when you look at all the other, pieces of economic data, they've all showing, clear signs of weakness, particularly household consumption, which is already beginning to contract. So the Reserve Bank's actions are already beginning to bite, and I think the Reserve Bank acknowledged that the economy today is much weaker. But looking ahead, what is the Reserve Bank's next move?
So in terms of the Reserve Bank, they're forecasting a rate cut in late 2024 and then another 225 basis points of rate cuts subsequent to that, all the way through to 2026. So, certainly on hold, very much over the near to medium term and then rate cuts thereafter.
Yeah, so you were mentioning that this was a much more dovish Reserve Bank than the markets were expecting.
That's
so
right.
How did wholesale swap rates and the Kiwi currency react?
Yeah, certainly because the OCR peak looks to be a lot lower than what the market was anticipating. We saw a big move lower in wholesale rates, and that was pretty much across the curve, so around 30 basis points lower. And the currency obviously also weaker. The Kiwi will return a lower yield going forward. So, the currency came off around 2.5% all in. Looking at where we are now relative to where we were going into it. It's just kind of still above that really key 60-85 level that we mentioned in our FX tactical report.
Yeah, so big moves in both rates and FX on the day.
That's right.
So we've gone from a cash rate now from 0.25% to 550. What is the outlook? We're closing that chapter of tightening. The Reserve Bank seems to be on hold. What is the outlook for rates?
Yeah. So, in terms of what the market's expecting, the market's actually expecting earlier rate cuts from early 2024. Obviously, it remains to be seen whether the market or the Reserve Bank turn out to be right. It was obviously the Reserve Bank that, clearly well signaled that 550 OCR peak, and they've certainly delivered on that. So they were right last time. Let's see who's right next time.
Yeah, so stay tuned. Thanks.